Hey guys, this is Vic from Grasping the Market and welcome to our morning briefing. It's Thursday, May 16, 6:17 a.m. So let's get cracking. We have no significant change on the longer time frame versus where we were yesterday. Although we have two more sessions left for the week, we have a potential weekly excess developing here. Nonetheless, the intermediate auction still points down. It's an important point because this is aligned with the longer time frame, the weekly and the monthly. That we made this outside probe below April's low. On the daily, we had the excess from Monday being challenged early in the morning at the open, but that was before a very strong trend session upwards that ended up being an outside day. As mentioned before, despite the trend down, the market seems to be finding some sort of balance, judging by the amount of overlapping done in this area. So we need to keep an eye on that. The confirmed excess is still in place, and an outside session with incomplete auction to the upside. We will see that in a minute in the market profile. Till the odds towards further upside in the immediate term, unless change is confirmed. As I said, we will look at the detail on the market profile. Zooming into the market profile, I will describe the early session clues that warn how the market was setting up before the big move. So basically, we were opening outside the range with a little gap low. Remember that Tuesday we had a very strong move to the upside, late spike, so we were assessing that. So immediately, just because of the location, we're rejecting that move. Now, first clue, the gap immediately closed. We open and we close that gap. That's not a big deal, but it is not a big deal because the gap was not that big. But we close it and we start probing inside. Obviously, sellers come in, they push it outside, and this is for me the most important clue of the day. They push it outside, but it doesn't manage to reach the overnight low. When you're rejecting in such a strong way a move from the day before, you open outside and you push and you cannot advance 3 more ticks to take the overnight low, that should warn you that something is wrong to the downside and probably there's nothing. Then we start pushing back inside, second time. This time we start making further advance on the A period. And at that point we start making volume here. Then the B period comes in and continues the pushing, and we start making more volume here. At this point we are 2 TPOs wide inside the range and we have a nice tail, and we couldn't reach the overnight low. And then another clue, the B period tags the A high at this level and starts retracing, leaving that poor high over there. So we have a poor high, 2 wide TPO, value being built back inside the range. At that point, you can position yourself for the long side using this reference, or the previous session low or the overnight low. Your risk is very limited, and the data from the market generated data is telling you that the strength to the downside is very limited. Then the tweet came in. And of course, the market was setting this up with the tweet. The thing exploded to the upside. So we didn't expect, obviously, the move to be that aggressive because we were not expecting a tweet or a comment or whatever that came out of nowhere. But as you can see, the early clues could have let you position yourself and take advantage of this. Could the tweet push it to the other side? Absolutely. That's what the stop is for. But I'm a strong believer that there were early clues of the market setup before the move happened. Then we push to the upside. Strong buyers are attracted. Additional buying starts, and we push all the way up. Now, late in the session, we see that this area and this area, they bought every break, bought, and there's a possibility of the market getting a bit long, judging by the amount of overlapping lows, and also that they couldn't extend from the 2860 area. But at the end of the day, they managed to close outside. It was an outside day. That's a very strong close. So, I mean, it was a strong move. The immediate focus for the morning, therefore, is value relative to the upper distribution that we have in the profile over here. With acceptance below the 2847.75, which is right here, which means closing the double distribution, denoting change. If this happens, we have some inclination of the odds for further balancing. But failure to close that double distribution, that means if we keep building value here, increases the odds for continuation. And I should remember that when days like this happen, outside days, and you close back at the top like it happened Friday last week, normally when you have that, if there is a strong interest in that direction, you will see an immediate continuation. We didn't see that on Monday, but I mean, we have the situation again. So remember that the all-time highs have no excess on the monthly. The all-time high was stacked overnight. That weak reference remained there. So this could be the beginning of the trend up. But again, as you know, anything can happen because odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.